Welcome, and thank you for joining us at our annual Local Government Sector webinar. For those of you who don't know me, my name is Angelina Garcias, and I'm the Director of overseeing the Local Government Work Program at the Essential Services Commission. Some of my colleagues from the local government team will also be presenting today. I'd like to begin today by acknowledging the traditional owners of the land we are meeting on today, the Wurundjeri people of the Kulin Nations. I also acknowledge the traditional owners of the various lands you are all on today and pay my respects to elders past and present. Since our last webinar back in December 22, we've provided advice to the Minister on the 23-24 rate cap. We've released our third outcomes report, updated our guidance and released the 23-24 compliance report. We've also provided our views to the Minister for Local Government on what should be included in a hardship guideline, and these are all matters that we'll talk to you about in today's webinar. Throughout the year, we have also met with several councils to discuss the rate capping framework, including some proposing to introduce new waste charges, and we've also met with peak bodies such as FinPro and MAV. In today's webinar, the team will take you through a number of presentations and our functions and how the rate capping framework works. It's a good opportunity for you to increase your understanding of the framework, and I encourage you to ask the team any questions or raise any issues you would like us to discuss. Before we continue, I'd like to just get some housekeeping out of the way. We are recording the session, so you'll see that your cameras and microphones have been turned off to minimise any interruptions. As we go through the webinar, you can put any questions you might have in the chat. We'll be monitoring this and we will stop to provide answers at the end of every session and also at the end of the webinar. We will also answer some questions that were sent to us ahead of today. If there are questions that we cannot answer today, we will get back to you early next week. Throughout the webinar, you will also see several polls pop up on your screen. It would be helpful to us if you submit an answer to these. These polls will help make the webinar a little bit more interactive and also provide us with some useful insights, and you'll be able to see the results from those polls in the chat. We will also place links in the chat to the various documents that we refer to throughout the presentations. And just finally, we will be making the slides and the recording available to everyone early next week. So this is the third year that we have hosted a webinar, and we received about over 100 registrations for today's webinar, and currently we have about 75 people in the meeting, so hopefully a few more will be joining as we go along. I'd also just want to note that we have a few CEOs in the audience today and also a few councillors, so that's good to see in terms of interest in sort of understanding how the framework works. So the purpose of today's webinar is to refresh or increase your understanding of the rate capping framework and the requirements on councils. As I said earlier, it also provides an opportunity for council employees to ask questions and seek clarification about these requirements. We will be covering three main topics today. First, compliance monitoring requirements. Second, our outcomes reporting. And then third, applying for a higher cap. And we have allowed 1.5 hours to ensure that we have plenty of time for questions. If there are specific things that you would like covered today, please let us know in the chat. And if you have the same query as someone else, you can just give their comment a thumbs up. So in this first session, I'll give you a brief overview of the framework and the Commission's role. As most of you would be aware, the Fair Go rate system was established through legislation in 2015. It limits the annual increase in rates by capping the increase in the average rate, and where the rate cap does not meet a council's needs, the council can submit a higher cap application for an increase above the rate cap. The 2020 Local Government Act introduced new requirements around how councils undertake their planning and engagement, but did not make any changes to the provisions of the framework itself, which is still sitting in the Local Government Act 1989. Under the Act, the framework was reviewed in 2021, which was 5 years since it had been introduced. and it's required to be reviewed every 4 years thereafter. The consultant's report on that review and the government's response were released at the end of 2022. The government largely accepted recommendations around improving communication of how the framework works, and we've had some early discussions with Local Government Victoria on how that might happen. The government also gave in-principle support to recommendations around bringing forward the announcement of the rate cap based on the May CPI forecast and having a longer higher cap application period. Both of those changes will require legislative amendments and are expected to be implemented over the medium term, so over a couple of years. Also, in response to recommendations in the consultant's report to include sector feedback in the ESC's rate cap advice, we have incorporated consultation with FinPro and MAV into our rate capping advice process. The Commission has 4 functions under the rate capping framework. Our first role is to provide advice to the Minister on the rate cap each year and provide advice on any other matters. Second, we assess and make decisions on higher cap applications from councils seeking an increase in rates above the rate cap. Third, we monitor and report on council compliance with rate caps each year. And then fourth, we monitor and report on outcomes under the Fair Go rate system every 2 years. In support of these functions, we also provide guidance to the sector and may undertake studies as required. Under recent changes to the Act, the Minister is also required to consult with us before issuing guidelines relating to the payment of rates and charges. Local Government Victoria and the Minister are in the process of finalising the first set of these guidelines. We provided the Minister with our initial views on the content of the guideline in February this year and then provided a submission as part of the consultation on the draft guideline in October. Both our documents can be found on our website, and our views were informed by our experience in developing similar guidelines for other sectors, approaches in other sectors, and targeted consultation with councils and community groups. What we found is that by taking a proactive approach in supporting people experiencing vulnerability results in better outcomes for both the individuals and service providers. The Minister is also now responsible for setting the maximum interest rate that councils will be able to charge on unpaid rates and charges. The Minister must consult with the ESC before setting that interest rate, and we are expecting to be asked to provide that advice in this financial year. And we will be consulting with the sector on an appropriate approach. We will talk more about these functions throughout the remainder of the webinar. We might just pause here to see if we have any questions. It doesn't look like there are any questions in the chat. As I said earlier, if you've got questions, pop them in the chat and we're happy to answer them. If you think of questions later about our role, also pop them in the chat. Questions. Given that there aren't any questions, we'll just move on to the next session, which is compliance with the rate capping framework, and I'll hand over to Connor, who will take you through those requirements.
Morning, everyone. My name is Connor and I'm a regulatory analyst within the local government team. I'll be giving you an overview of how the rate cap is set, what's required from councils under the rate cap framework, and I'll also run through our compliance testing and reporting process. So going to the next slide around timeline and process for the 24-25 financial year. This slide gives you an overview of the timelines for each process in the rate capping framework. I'll run through each very briefly before we cover them in more detail later on. As you may have seen, we released our compliance report for 23-24 last week. We aim to publish this report each year around November. Sometime before the end of the calendar year, the Minister for Local Government will release the rate cap for 24-25, and then in January, we'll release updated guidance on compliance for 24-25. We also expect any councils planning to apply for a higher cap for 24-25 to give us a heads up in January so we can plan for the higher cap assessment process. Then in February and March, any higher cap applications are received and assessed. Finally, councils are required to submit their annual compliance information for 24-25 by 30 September next year, allowing us to begin work on the 24-25 compliance report when the cycle starts over again. So going to the next slide around our advice to the Minister. Each year, the Minister for Local Government asks us for advice on setting the rate cap. When providing this advice, we must structure it in such a way that is based around the Department of Treasury and Finance's December CPI forecast, plus or minus any adjustments. In providing this advice, we seek to balance the interests of ratepayers with the long-term financial sustainability of councils. One question we received in advance of this webinar was around providing a forecast for the rate cap for future years. As the cap is set by the Minister for Local Government, and they are not bound to follow our advice, this forecast would have to be issued by them. As such, this query would be better directed to the Minister. That said, we'd point councils towards the Department of Treasury and Finance's 4-year CPI forecasts for budgeting and planning purposes, as our advice ultimately must be based around that forecast. This year, we met with both FinPro and MAV to get their thoughts on how councils were going financially and what they were expecting from the rate cap. Our advice will be made public when the Minister releases their decision before 31 December, so we cannot give you any heads up as to what our advice looked like this year before it's released publicly. When it comes to actually setting the cap, it should be noted that the Minister does not have to follow our advice. They can set the cap at whatever they see fit, given they consider our advice. In the past, the Minister has always set the cap at forecast CPI. However, in 23-24, they set it at 3.5%, 0.5% lower than forecast CPI and what we'd recommended. The Victorian budget released in May forecast CPI for 24-25 at 2.75%. However, the RBA's most recent meeting noted that while inflation has likely peaked, it has been stickier than expected, so may remain above the RBA's target range of 2 to 3% for longer. Another question we received ahead of this webinar was whether we will recommend a catch-up allowance in this year's rate cap, given the gap between forecast inflation and actual inflation in recent years. Again, while we can't discuss the details of our advice before it's made public, we do note that this has not been our methodology in previous years. In fact, looking at the 8 years of rate capping, the cap has been set above the actual rate of inflation half the time and below the actual rate of inflation the other half. In the past, we've not taken away an amount to true up the next year's cap when inflation has been higher than the cap, or added on an amount when it was lower. Instead, we've assessed council financial sustainability, the interest of ratepayers, and inflation forecasts are fresh each year. So going to the next slide around requirements for all councils. There are 3 main requirements for all councils under the rate capping framework. They are to comply with the Minister's cap or your approved higher cap, to provide us with your annual compliance information by 30 September each year, and to respond to information requests for the outcomes report published every 2nd year. As we just published our outcomes report earlier this year, the information request for the next outcomes report probably won't be coming until the end of next year or the start of 2025. Complying with the rate cap. A council is compliant if their capped average rate does not exceed their base average rate by more than the rate cap. With that, only general rates and municipal charges are included in this. Other charges such as waste charges and special rates are excluded from the cap. The base average rate is the average rates paid by a property in your municipality. This is calculated by taking the sum of total revenue leviable from general rates and municipal charges as at 1 July of the base year, and total annualised supplementary rates divided by the number of rateable properties as at 30 June of that base year. Capped average rate is calculated by dividing the total revenue leviable from general rates and municipal charges as at 1 July of the capped year by the number of rateable properties as at 1 July of that year. The increase between the two should be no more than the applicable rate cap or higher cap in place. Compliance, it should be noted, is based on actuals, not budget figures. And we report on non-compliance regardless of the magnitude. However, we do differentiate between material and immaterial non-compliance. We generally consider that non-compliance is immaterial if it is negligible and of no immediate concern. So going to demonstrating compliance, we require councils to submit 4 pieces of information in their compliance submissions. The first is their annual compliance template spreadsheet, which includes the data required to calculate the average rate increase. We also require rating system reports as at 30 June of the base year and 1 July of the capped year to allow us to verify the annual compliance template numbers. The third piece of information is a better practice rates database checklist, which promotes better practice and helps avoid non-compliance. And the final thing is a CEO certification of the data provided to provide assurance that numbers are true and correct. So going to the next slide around our compliance report. We released our 23-24 compliance report last week. In it, we found that all councils were compliant with the minister's cap. There were no higher caps in place for 23-24. One council, Ararat, budgeted to not increase their average rates for 23-24, while 8 other councils budgeted to increase their rates by less than the cap, ranging from 2% to 3.25%. All 79 councils now use service rates or charges to partially or fully recover their waste service costs, with 3 councils introducing these for all ratepayers for the first time. We also reported on the 14 councils that introduced some form of new waste rate or charge, focusing on revenue neutrality and/or cost reflectiveness, and the community engagement process leading up to the introduction of these charges. We noted that councils were budgeting an average annual increase of 16.7% per rateable property for waste charges at a time when the rate cap was 3.5%, but also noted that the cost to deliver waste services was growing rapidly. We noted that exactly what services were being recovered for from these waste charges varies broadly from council to council. Some were limited to curbside waste collection, while others include public waste services such as public bins, street sweeping, and litter removal. The definition under the Act is broad, with service charges being for waste, recycling, or resource recovery services. Local Government Victoria's 23-24 Council's budget summary raised concerns around the use of waste charges for public waste services unrelated to curbside waste collection, noting that while this is technically permissible, it could be seen as an attempt to circumvent the rate cap. It's up to individual councils to determine what waste services will be recovered for through service rates or charges, with councils expected to engage with their communities in the making of these decisions. So going to questions, there were 2 further questions we received in advance that I'd like to respond to quickly now, and then I'll get to any that we might have received in the chat. The first is whether rate capping is likely to end anytime soon, and if not, why it isn't indexed to CPI or inflation. Regarding whether rate capping will end anytime soon, we'd like to point out that while we do administer the rate cap, it is ultimately a state government policy outside of our control. As such, we can't offer any insight into whether it will be ending anytime soon. That query would be better directed to the Minister for Local Government and/or Local Government Victoria. As for why it is not indexed to CPI/inflation specifically, that's another state government policy question that sits outside our control. However, we do consider inflation when developing our rate cap advice, and ultimately, as mentioned earlier, the Department of Treasury and Finance's December CPI forecast forms the basis of our advice, plus or minus any adjustments. The second question we received was around financial assistance grants and the budget process, with a question noting that the Victorian Local Government Grants Commission doesn't typically release the annual allocations until partway through the budget process, and the forward payment isn't known until June, creating uncertainty in the budget process. Unfortunately, this is outside of our control, and concerns regarding this would be better directed to the Victorian Local Government Grants Commission itself and/or the Minister for Local Government. So I'll just check if there's any questions in the chat. No, so I'll just hand back to Ange then. Thank you.
To answer them. So up next, we have Natul, who's going to take you through our outcomes reporting.
Morning, everyone. My name is Nitul, and I'm one of the analysts working at the ESC. I may have interacted with some of you during our recent rate cap compliance work. I'll be giving you an overview of our role in outcomes reporting, what we're trying to achieve, and our findings from the latest outcomes report. So one of our statutory roles under the ESC Act is to produce a report every 2 years on the outcomes of rate capping in Victoria. We use this report to identify any impacts or trends across the sector and any emerging issues. We released our third report in May this year. We looked at rates, revenue, expenditure, which includes both operating and capital expenditure, and overall financial position. The aim of this report is to publish information which helps inform readers about how councils are operating in a rate capped environment. This also tells people whether the rate capping framework is working like it should and helps to find out quickly if there are any adverse impacts of rate capping. One more thing about our report is that it's released publicly. So it's not just targeted to those working in the local government sector like yourselves, but also to the general rate paying public and anybody else who might be interested or may want to access it. This year's report focuses on what happened in the 6 years of rate capping. So that's between 2016-17 and 2021-22. In our role, we released a sector-wide report along with information on individual councils. The sector-wide report highlighted and provided an overview of what's happening in the sector and also highlighted any differences between groups of similar councils. Information on individual councils is available on our website in either PDF format or as an interactive dashboard, which allows for comparisons. Now, I just want to note here that the fact sheets are not designed to be performance reports. Our aim is to present information that readers can use to form their own views. So, what were our key observations from this year's report? On average, ratepayers paid lower rates than they would have if there was no rate capping. This reflects that the Minister for Local Government has set the annual rate cap equal to the forecast inflation rate in the first 6 years of rate capping. That only 11 of the 79 councils were given approval to increase their average rates by more than the minister's cap, and that there was a high level of compliance by councils with their applicable rate caps. And for the first time in our 2023 report, we included information on the amount of rates debt across the sector. We saw that for each council group, the dollar value of overdue rates grew in real terms since the rate cap was introduced. This increase largely occurred in 2019-20 and reflects ratepayers deferring payments due to difficulties they faced during the pandemic. The increase in rates debtors highlights the importance of having well-functioning financial hardship policies and practices in place, not just for the ratepayers experiencing financial hardship, but also for the financial health of councils. Consideration of how councils can improve their policies to support ratepayers in hardship is also timely, given the rising cost of living and changing economic circumstances faced by Victorians. As I said before, we also looked into revenue and found that it had increased in real terms over the 6 years. We found that revenue grew in 6 years, but at a slower rate than it did prior to the introduction of the rate cap. Stronger growth in the sector's revenue from contributions and grants offset slow growth in rates charges and a sharp decline in user fees, statutory fees, and fines. We found that in real terms, expenditure per person on material services and on employee costs had increased. And we looked at the sector's spending on different categories of capital projects and council's asset renewal ratio. We saw that spending on capital works continued to grow in real terms. For the sector as a whole, spending per person on new assets, asset upgrades, and asset renewal projects had increased. And there was a notable decrease in spending in 2020-21, but we think that's likely due to coronavirus pandemic restrictions. Since there was growth again in 21-22, that decline seems temporary. Now, we also looked at the working capital ratio and the indebtedness ratio of councils and found that the sector as a whole had the capacity to meet both its short-term and long-term liabilities. Overall, the sector's operating position, while declining over the period, remained positive. On average, from 2018-19 to 2021-22, all council groups except for small shires had enough revenue to fund the group's activities. 27 councils reported an average adjusted underlying result that was negative, and this included half of the large and small shires and regional cities, 1 metropolitan council, and 2 interface councils. However, it's worth noting that all 27 councils were with an average negative operating result had sufficient working capital and relatively low levels of debt. As I mentioned before, if you want to look at individual council information, then please have a look on our website. Around the middle of this year, we sent out a survey to the sector. We received over 100 responses to that survey. We included a few questions about our outcomes report as well, and most of the respondents primarily assessed that the report and its associated materials were readable, informative, and adequately captured and communicated the impacts of rate capping. Most respondents mainly read the executive summary and one or more of the individual council fact sheets. At the end of the survey, we asked respondents which other topics they'd like to see included in the next report. We received responses suggesting we look into things like unrestricted cash, cost shifting, asset renewal backlog, and the impact of natural disasters. In deciding whether to include these additional measures in future reports, one of our primary considerations will be whether or not there's existing data. We try to focus the outcomes report on data that's already reported and not put extra pressure on councils to gather and report more data. As I said before, we have to publish the report every 2 years. So the next report will likely come out around May 2025. We will likely start working on it in the second half of next year and will follow a similar process in liaising with councils. Although we may ask for rates distribution data as part of the council's compliance reporting rather than separately at the end of the year. If any of you have any suggestions for improvements in the way we report outcomes, then please feel free to reach out to us. We'll continue to monitor the sector in that report and give an update on how the rate capping framework is working. We anticipate that it'll have similar elements to this year's report, including the fact sheets and the interactive dashboard. And like I said before, we'll consider the suggestions we received through our survey for additional measures to report on, taking into account the reporting burden on councils. We specifically asked in our survey for suggestions of information or measures we could include in relation to ratepayers experiencing hardship. While we included information on rates debtors in our 2023 report, we acknowledge that these measures may not be the best indicator of hardship. We expect that councils reporting in this area will evolve as councils implement the new legislation and guidelines to be issued by the minister. Now I'll pass it back to Angelina if there's any questions. Thank you.
Hi, it doesn't look like we've got any questions on outcomes reporting. So we can probably just move on to the next session, which is about apply. Oh, hang on, someone's put their hand up. Jim, if you've got a question, can you put it in the chat or? Oh, hang on. I might be able to unmute you. Apparently, we may be having issues with our chat. Let me. No, it doesn't look like I can. Oh no, I think you're unmuted. Jim, are you unmuted?
I'm unmuted, yeah.
Okay, so if you've got a question, Jim, please feel free to ask it.
Okay, thank you. Just a quick question to Natal, essentially about a comment that was made there on the outcomes report that suggested that most councils had sufficient funds to be able to meet their costs.
Sorry.
And
Jim, sorry, Jim, can you just start that again? I had my sound off, so I couldn't hear you.
And Natal made a comment that the assessment of the last outcomes report was that most councils, apart from some small rural councils, were able to meet their had sufficient revenue to meet their the necessary costs. I had just wondered, in light of the recent Grattan Institute report that suggested that there was a significant underfunding of councils to meet their obligations in respect of roads, as to whether or not there was a significant difference in understanding about what council costs are between the Essential Services Commission and the Grattan Institute, and if there was a limitation on how the ESC actually views council's long-term obligations around assets.
Thanks for that question, Jim. I think that obviously the work that the Grattan Institute had a very specific focus on roads and road funding, and I think there was probably, it looked at a lot of unmet demand for roads maintenance and that sort of stuff as well. I think in terms of the analysis that we do in the outcomes report, we're obviously looking at some of these issues at a fairly high level, and we're looking over a period of time. And so some of the conclusions that we reach, as I said, are at that high level, and we haven't looked at individual councils in terms of their ability to meet their commitments or to deliver individual services. I wouldn't classify it as a different level of understanding. I would say it's a different focus. But, you know, I mean, if you've got some commentary on how you think we can improve our outcomes report or focus on particular issues, then we'd be happy to for you to send those thoughts or ideas through. Have we got any other questions now that apparently we've worked out that chat isn't perhaps working? Just if you have got any questions, just raise your hand and we'll unmute your microphone and you have the opportunity to answer those questions. So if we haven't got anything else, then we'll move on to the next session. Oops. So in this final session, myself and Martin Johnson will take you through the HICAP application process, both in terms of the requirements set out in legislation and our decision-making process. I'd encourage you to stick around for this session, even if your council is not considering applying for a HICAP anytime soon. It provides a good opportunity to increase your understanding of how the process works and for us to answer any questions you might have. So councils who feel that the Minister's rate cap is not sufficient to meet their needs can apply to the ESC for a higher cap. Councils can apply for up to 4 years of higher caps, and Martin will talk about the application process, including timelines, in the next session. In the next few slides, I will focus on what a higher cap application needs to address. The legislation requires an application to address 6 matters, and our guidance gives more detail on what we expect to see in addressing each of those matters, but I'll take you through them in the next few slides. So the first and second matters an application should address are the increase being sought, the years and the reasons for the higher cap or caps. Both the higher cap amount and reason need to be consistent throughout the application and any supporting information. The application should include enough information and context for us to be able to understand the long-term funding need and the consequences of a higher cap not being approved. Applications can specify more than one reason in a year or in different years of a multi-year application. If different reasons are specified, then applications should demonstrate and quantify the funding requirements for each reason. Reasons for a higher cap could be to address a material change in financial circumstances, a change to the nature or level of services provided, specific infrastructure needs, to ensure long-term financial sustainability, or some other factor or some combination of factors. There are no reasons that automatically ensure the approval of a higher cap. A higher cap represents a permanent increase in a council's rate base that continues to compound over time. And for this reason, we do not expect to receive applications that aim to fund short-term expenditure or to meet cash flow requirements. These are inconsistent with the purposes of the framework. So the next matter application should address is how the views of ratepayers and the community were considered in proposing the higher cap. Councils will differ in how they engage with ratepayers and their communities, and we do not prescribe how councils should do this. This decision sits squarely with councils. However, applications should explain how the council engaged with its community and why it chose this approach, what information it provided to the community, and how the information was provided. The engagement should cover the other legislative matters and make clear the options under consideration and the trade-offs between these options. Applications should also explain what the council learned about the views of its ratepayers and the community, and how the council took these views into account in deciding to seek a higher cap. Importantly, this matter is not about seeking or showing a majority community support for an application. We expect councils will increasingly integrate their engagement on the need for higher caps into their existing planning and budgetary processes. This should be easier given the requirements for community engagement in the 2020 Act. There's no need to undertake separate specific engagement for the higher cap application. However, if a council is relying on engagement it previously undertook for planning or other purposes, the application should explain how the council has incorporated and dealt with the issues most relevant to the higher cap, such as the reason, any trade-offs or alternatives. The fourth matter that should be addressed in an application is how the higher cap is an efficient use of council resources and represents value for money. This matter is about ensuring that any additional revenue raised will be used efficiently and any outcomes being pursued represent value for money for ratepayers. In many ways, this matter is consistent with demonstrating the service performance principles in the 2020 Local Government Act. The application should show that the council has sound processes and policies to ensure it uses resources efficiently in general and that it followed them in determining the need for a higher cap. The application should also show that the council took appropriate steps to ensure the planned expenditure would represent value for money for ratepayers. The fifth matter is about showing whether the council considered reprioritising proposed expenditures and or pursuing alternative funding options and why those were considered inadequate. The application should explain why raising additional revenue through a higher cap is preferred and explain what other options were considered, including any trade-offs. That is, the trade-offs between the financial impacts or the service impacts or infrastructure impacts that arise from the choice of pursuing different options. Alternative options should be considered in the context of all of the council's operations on both the funding and the service delivery side. It is important to note that the rate capping framework, or the ESC, does not require councils to take on debt, but we do recognise that debt finance can be a key element of prudent and responsible long-term financial planning. Borrowing money to fund the construction of long-lived assets can help spread the costs of these assets over time and also helps ensure those who benefit are also those who pay. So we would expect to see consideration of debt as part of any higher cap application. The last matter is about showing how the assumptions and proposals in the application are consistent with council's planning and financial management policies. This application should show how the higher cap is integrated into the council's long-term planning in terms of the financial impacts and the service and infrastructure impacts and engagement. The application should show the reasons for the application and underlying need are consistently reflected in council's financial planning policies and documentation. So our assessment is based on those 6 legislative matters and the statutory objectives of the Fair Go rate system, which are about promoting the long-term interests of ratepayers and the financial sustainability of councils. We also consider a council's compliance record with previous year's caps. For us to approve a higher cap, the council needs to have demonstrated that it has a long-term funding need that should be met through a higher cap. So how do we form that view? So in assessing a higher cap, we basically ask ourselves 4 questions. First, what is the council's underlying position? So why does the council need a higher cap? So that's thinking about the size and the reason. Here we're looking to understand council's financial capacity and any infrastructure and service needs. Second, what has been done to manage? We ask ourselves what has been done to manage the underlying position. So, and that's thinking about efficiency and value for money, and then what alternatives have been considered. So here we are looking to understand what actions the council has taken to address the issues it's facing. Has council undertaken service reviews or considered reprioritising expenditure? Has it considered efficiency initiatives or undertaken business cases or cost benefit analysis? Has the council looked at alternative sources of revenue, such as grants, borrowings, or charging user fees? Has the council considered reprioritising its services or infrastructure delivery, or changing the nature or level of current services provided? Or has it identified efficiencies through its business or by collaborating with other councils to reduce costs? The third question we ask ourselves is how ratepayer and community views have been considered. So we look at what engagement has been done and how those community views influenced council decision making. The fourth question we ask ourselves is has the council's need for a higher cap been reflected in its planning policies and processes? We want to see that the council's need for the higher cap has been reflected in its planning. By considering the evidence provided by a council in its application and addressing those 4 questions, we will be able to form a view on whether the application demonstrates that the council has a long-term funding need and that it is in the long-term interest of ratepayers and the community for the ESC to approve a higher cap. The rate cap itself is a fairly blunt instrument that doesn't take into account the diversity and different needs and financial positions of individual councils. In many ways, it just acts as a benchmark for council to decide whether or not they require additional revenue to meet the needs of their ratepayers and communities. The higher cap process provides councils with the opportunity to engage with its ratepayers and the community to explain to them the cost pressures and trade-offs that the council is facing. The information and the detail that we seek as part of the higher cap application process is information that the council should have already considered in assessing its options before deciding that an increase in rates above the cap is necessary. So we feel that councils with good planning and policies and processes in place should be able to meet those higher cap application requirements. We'll leave any questions people might have to the end of Martin's presentation. So I'll now hand you over to Martin, and he will take you through the higher cap application process itself.
Thank you, Ange. I'll first off, the timelines and the process for the 2024 to 25 rating year are set directly or guided by elements of legislation. By November each year, we usually update our guidance to councils for the upcoming financial year. It's pretty detailed, around 50 pages of information and assistance, and it's on our website now for 2024 to 25. And then around the end of November, as we said earlier, we send the Minister our advice on the rate cap percentage. In the past, this has been based on DTF forecasts of the CPI for the next financial year. By the 31st of January, Council should notify us if they're considering a higher cap. This notification is informal and it's not binding on the Council, but it does help us to organise ourselves, our staff, to plan our work and to meet with councils. And it's not a legislated requirement, but in the past, we have also published a list of councils who have notified us. Then those who are going to apply, the councils must submit their applications by the 31st of March. Or the minister may indeed need to change the statutory deadline, because we then take up to 8 weeks to assess and release our decisions by the beginning of June. Then the application requirements are as follows. These are items needed to justify the higher cap. You need them in order to give us the information that we need. Some forms and instructions are on our website now, together with our guidance to councils. Our application form or cover sheet is a 4-page PDF form for councils to use. It's for the summary of financial needs and reasons for the higher cap and contacts at the council, and sign off on the application by the council. But the proposed increase in dollar and percentage is relative to now, the year in progress. You may well have calculated this already based on your up-to-date planning and engagement. You don't need to know at this point what next year's minister's cap will be. Next, your separate statement is to be detailed enough to address each of the 6 legislative matters. We're looking for a free-form text explanation or justification of your reasons, and a description and details of your community engagements and your priorities and so forth. This statement has to cover all the legislative matters, and it needs to be cross-referenced to numbers and text in supporting documents and reconciled if different. Because your supporting documents or extracts of documents or links to online documents, as they're referenced in your statements and also in your budget baseline information, these supporting documents may be asset plans, council vision, other long-term financial plans that perhaps predate your, almost certainly predate your higher cap application. But older plans and projects may be for somewhat different stages of a project or costs of a project, and they may need reconciling to what you now want to go ahead with. What we really look for is real life published or internal working documents or reports or plans. We prefer them not to be ad hoc creations just for this high cap application, but real working documents. Then there's also our budget baseline information template that I mentioned a moment ago. It's a Microsoft Excel workbook of impressive size. It starts with detailed explanations and instructions for your use of the workbook. It uses data from your budget, from your 4-year council plan, 10-year financial or asset plans, and so forth. All of the material you send us in an application for a high cap are for publication on our website, unless elements of the application are clearly marked as confidential. Then, in the typical application process that follows, if you look for a moment, in one, council makes the application. We check it. We ask for anything that's still needed. You apply to us. We acknowledge receipt of the application. We check that it holds together. And when we get into the detail, we may find that we need further information. We make a request for further information, an RFI, for anything large and significant. We may make informal contacts by phone or email for minor fixes and clarifications that need immediate attention. Then a bit further on, we get independent expert advice as we need, and incorporated in draft analyses. We look for external experts in financial sustainability and accounting, perhaps, or infrastructure maintenance and reporting, or community engagement activity. Then we complete our analysis and recommendations. We assess against the statutory objectives to promote the purposes of rate capping. We assess against the 6 legislative matters. We also consider council's compliance history and council's compliance with the Commission's application requirements on this occasion. Getting towards the end, we make our recommendation to the Commission and we finalise the Commission's decision and any special order and the publication of the application and the decision on our website. There will be cover sheet details, the statement, the BBI templates, everything else, the RFIs, and everything that's not marked confidential. And now moving on to a little more about the Commission decision. Simply, the Commission approves either the same higher cap for the same period as the council has requested, or a higher cap, but not as high or for as long as the council's request. Or indeed, the Commission may approve no higher cap. Whatever the Commission's decision is, it may include observations about the council's management or engagement processes. If we go on to look at past higher cap decisions, 17 past higher caps on record are in our system. 7 were approved in total, and these were generally approved for infrastructure renewal or asset renewal. Only 4 of the 17 were not approved at all, and others were approved in part. Generally, approval was not given for ongoing operating costs. In the previous slide, observations about the council's management or engagement, we said that some were not approved. In some cases, the council did not clearly show a long-term need for a higher cap, and it didn't demonstrate adequate or appropriate engagement, or maybe both. So they were not approved. There was qualified approval for some applications, a need for better long-term financial planning, and involvement with the ratepayers or the community. And it's good to see that is now an element of the 2020 Local Government Act. And some applications were approved for an alternative cap and approval in parts because of perhaps lack of detailed support for extended higher caps. You can check all our decisions on the website, and it may help if you do this, if you're considering a higher cap for similar purposes. We go to past higher caps. We recall that a higher cap and a minister's cap both set a maximum increase. In the first year, councils could only apply for 1 year. In later years, councils could apply for 1 to 4 years, but these were not always approved for the full period vested. In community interest, conversely, a council may freeze its rates or apply average increases below the applicable cap, that's the minister's cap or the higher cap, if it chooses. Recently, some councils have done this, sometimes for COVID reasons or because of receipt of unplanned revenue. And notably on this table, a standout figure is Mansfield's application for a higher cap of 13.94%. For anyone who's perhaps not read the decision there, it was shown to be revenue neutral, and other adjustments applied was said to limit the impact on residents of a change to CIV service charges. And moving on once more to reflections on the past higher cap applications, you may find it to consider these points. We found that good plans, policies, and practices for engagement and long-term financial planning are particularly helpful. They mean that the council's application is well placed to demonstrate long-term funding need. They show recent energetic engagement, which is said to stimulate targeted development of council's applications. Conversely, early engagement that you rely on may, we find, have missed discussing trade-offs. But we are here to help councils comply with the legislation. And as an aspect of that assistance, we're ready to discuss with you the question of applying for a higher cap where this appears necessary to you, the council, and perhaps improve the prospect of success for your application. But now I'll hand you back to Ange for any questions and to round off this webinar. Thank you.
Thanks, Martin. It's been brought to my attention that perhaps the chat function isn't working as we thought it was going to work, and so I don't think people have been able to put in questions or perhaps even interact with the polls that you would have seen popping up on your screen. And I apologise for that. Obviously, we must have done something wrong in the background. But so if people do have any questions about anything that we've talked about today, raise your hand and we'll unmute your microphone and you'll have the opportunity to ask your question. Failing that, if you're not comfortable doing that, we're happy to take any questions that you might have. You can send them through to us. In the next slide, I'll talk about our contact details. So, yeah, if there are any questions that people have about anything that we've talked about today, or if you've got any questions about the framework or our roles or functions, then, yep, just send those through to us. And as Martin said, we're always happy to meet with councils and take you through or try and answer any questions that you might have. Doesn't look like anyone's putting their hand up, so I might just go on to the final slide, which is really just to remind everyone of our contact details. So we're happy, as I said, we're happy to meet with councils at any time or to answer any questions that you might have. And the best way to contact us is through the local government email, and which is the localgovernment@esc.vic.gov.au. We monitor that on a daily basis. So the team's fairly good at getting back to queries that come in through that email. Our website is also a good source of information and resources. It contains our guidance, our previous HICAP decisions, advice to the Minister, and our compliance report and other publications. So that's always a good source of information if people want to have a look at our various reports or have a look at, Martin said, some of the previous HICAP applications that have been approved. We'll also continue to send email updates on our work program and requirements. And as I said, we'll send out a copy of the webinar slides and recording out early next week. Just before I go, I'll leave you with a reminder of upcoming timelines. So the Minister's cap will be announced before the end of December, and we will put our advice online when she does. And that any council thinking of applying for a HICAP next year should get in touch with us as soon as possible. Thank you all for attending today, and I apologise again for the chat function not working as we had intended. If you do have any feedback on today's webinar, or if there are other things perhaps that you would have liked to have seen, please get in touch with us through that local government team email. So that's the end of our webinar. So I'd just like to thank you all for attending today, and like to wish you all the best for the upcoming festive season from the local government team. Thank you.